Good morning, everybody. Mike Vacchi, Princeton Trader here from Mr. Topstep with your Monday morning pre-market webcast. Okay, so, you know, Friday was a down day, down 1.9%. Oh no, now what's going to happen? I mean, seriously. I mean, people were really hitting the panic button a little bit on Friday afternoon about a down day. It was a 30 handle day, okay? Kind of like this candle over here was a 30 handle day. Nobody freaks out on these days, but everybody freaks out on these days, okay? Um, so where do we go from here? I don't know. You know, we bounced. We did 1431. We're giving that back now, which is not surprising. I mean, you know, you've got to understand the dynamic of what's happening here. You had a lot of people trying to catch knives on Friday that are coming up to areas where they're break even. And when they get there, they are going to, you know, push the button, take their money back, and swear that they'll never do it again. That's just the psychology of trading. Um, we have not breached the lower Bollinger Band, and right now the lower Bollinger Band effectively matches up with a retest of these 1416 lows. So I'm still looking for potentially a lower high that will head back up to make a higher low in this area, and we wedge into the election. Because you've got national polling now that is 47-47. That doesn't mean much to me. The only thing that really matters to me is what the tracking polls are doing in Ohio. But that said, it indicates uncertainty as to who the next president is going to be. And that uncertainty is getting played out in the market with this two-sided trade. So, you know, we'll have to see. What I am particularly concerned about today is this red line here, the 50-day exponential moving average. Do the bulls take that line back, or does that line become firm resistance? If the 50-day becomes firm resistance, because we have broken the 20 decidedly, then you could really see an acceleration to the downside. If we rally, I would expect the rally to move up to the green line here, the middle Bollinger Band, the 20-day simple moving average, and I would want to be a seller of this move, and I want to be the buyer of a band punch. Now let's zoom things out. Way down here at 1368, you have the 200-day exponential moving average. Okay? So the average of 200 days of trading activity is 1368. The average of 100 days of trading activity is right here, the yellow line, 1402. Okay? So if you go down 1.9% on a day that doesn't even breach the lower Bollinger Band, it is something to take note of, but it is nothing to get excited about, and it's certainly nothing to panic about. So I think everybody has been way too bullish and had their expectations way too high about what the stock market is going to do. That we're going to go to 1475, we're going to go to 1490, 1550, 16. I've heard 1600 in a couple different places. Not saying that we can't do that, but you need to reload from higher levels. Things don't go straight up. So keep it in perspective. Let's see what the market's going to do. And because we could trade to the lower band, which is 10 down, or to the middle band, which is 10 or 12 up, for anything longer than a scalp today, we're in no man's land. So sit back and have some coffee and see how this thing opens up. That's my best advice to you. Okay, everybody have a good one. Mike Vacchi, Princeton Trader from Mr. Topstep. I'll be back tomorrow morning with another webcast. Trade 'em well, everybody.